Okay, it's tech earnings halftime on 3 versus Trish. Apple and IBM have set the pace with the big beats, but Amazon, HP, Dell, Cisco, RIM, they are all still to come. So what do? We've got 3 views right now on your last trade of the week. Watching the fundamentals for us, we have Shaw Wu, analyst at Stern AG. Our chart guy today, Mark Newton over at Grey Wolf Equity Partners. And we've got the options trade from Larry Schober of SFG. Wonderful to see you all on this Friday ahead of what's going to be a big week for tech. Shaw, I want to kick it off with you. Give me the overall tech landscape as you see it, and what is the buying opportunity?
Yeah, I mean, when you look at tech in general, you have Apple, obviously the class act, leading in the consumer space, and then you have IBM and enterprise, and pretty much everyone else is trying to catch up to them. When you look at, HP, they're trying to catch up with HP and Dell, trying to catch up with IBM, trying to do more software and services. They're also chasing Apple in terms of tablets and smartphones. So, I mean, that's really been the story. You get the 2 leaders report, and now we're going to see the others. Okay, so what do you like for next week? I mean, a lot of these trades, let's not forget, are pretty crowded. I mean, certainly Apple being the one place that everybody wants to be. I understand that you're a little concerned about some, but you do have a buy on HP. Walk us through what you like, what you don't like. Yeah, so HP is still a fundamentally challenged company, but we see, we think the stock's oversold, arguably, and it's really about, Meg Whitman continuing to unwind, what was done wrong with the previous management, what the previous management did, just unwinding that. One of the first moves was to continue, to stabilize the PC business, to do that.
So you buy it here?
And so we think, as she continues to do that, we think the stock should trade into the mid-30s.
Okay, Larry, I know you're pretty bearish on the sector as a whole. Walk me through why.
Especially with Hewlett-Packard. I mean, I love Meg Whitman, and she is setting a realistic, pragmatic approach. But let's face it, the PC business is dying. Hewlett-Packard is faced with a lot of competition from IBM, Oracle, NetApp, EMC. The fact of the matter is, technology is going to grow when it comes to consumer trends are going into the enterprise right now, whether it be mobile, social, local, or commerce. Hewlett-Packard has none of that. I think Hewlett-Packard's $20 a share. At best, your money is going to be asleep at 28.
Asleep there at 28. Okay, Mark, let me point out one of the obvious things here. All these companies are very international players. The international economy is not looking as strong as the U.S. economy, with Europe looking at recession and China slowing down. Talk to me about what the charts are telling you. I know they're not telling you any of this information, but they're telling you something interesting. What?
Well, from a technical perspective, we have seen a lot of improvement from technology just in the last couple months, and particularly from semiconductors, and that's been one of the better parts of technology, outperforming both tech hardware and software. And so, near term things have gotten a little bit stretched, and technically you could expect to see a little bit of back and fill over the next few weeks. But overall, the move above 380 and the Philadelphia Semiconductor Index, the SOX, is still quite constructive. And so, any pullback would be used as a buying opportunity, I think, for technology. You're seeing a little bit of momentum improvement on a weekly basis. And, you have to be selective, though, about what to own. I mean, stocks like Apple have had very, very good runs and are fairly stratospheric when you look at momentum. Other ones like Amazon have pulled back and look a little bit more technically attractive from that perspective.
Hey, Shaw, hang on one second. I just want to jump right back to Shaw, because we did have a bit of a debate here going on between our options trader there, Larry, and Shaw, who's fairly bullish on the sector. Larry says, no way. He's bearish on tech. He's concerned about HP. He's saying the exact opposite of you. What do you think of his comments?
Well, the way we look at it is technology, really 2 things, right? It helps productivity. Things are tough, so worker productivity is enhanced. And the other thing is just on the consumer side, actually, as you mentioned, going mobile, going social, enabling these type of technologies, that's what the hardware does. And, Apple obviously is a play on this, but Hewlett's actually plays in this as well, being the largest player in PCs. But also keep in mind that this is a company that was in a lot of trouble, over the past year, and it's more about unwinding that, and we think that alone could get the stock into the mid-30s.
Okay, Larry, final word here to you. Tell me what to do. How can I make money in technology today?
Well, this is how options tell a great story, because if you look at out-of-the-money puts, they're bid up really high. That's telling us there's a good chance that Hewlett-Packard could see a reversal in price. Right now, you can go out to January of 2013 and perhaps put on buy a $20, $28 put spread. You only need to pay $2.60 for that. That's $260 to make $540 if the price goes below $25.60 between now and January. I think it's a safe bet.
All right, some good ideas from all three of you. Thank you so much. We appreciate it. Here's the cheat sheet for you on tech. Fundamental analyst Shaw Wu says buy HP, buy Amazon. Our technician Mark Newton likes semis over the tech industry as a whole. And Larry Shover has a bearish option trade on HP, and he's bullish right now on Amazon. There you have it, Lisa.